$100K for Bitcoin. It's the milestone we've all been watching for, but what does it really mean for the future of cryptocurrency? The headlines are screaming, investors are buzzing, and everyone from Wall Street pros to college students is asking the same question. Is this the peak or just the beginning of an even bigger bull run? But here's the catch. Most people aren't ready for what comes next. Think about it. While some are celebrating, others are quietly making moves, setting themselves up to ride the wave of this bull cycle. And the truth? Missing this window could mean watching opportunities slip through your fingers. Welcome to the Chain Point channel. In this video, we'll break down why this moment is a big deal, not just for Bitcoin, but for the entire cryptocurrency market. Whether you're new to crypto or a senior crypto investor, the strategies we're about to share could be the key to staying ahead. But before we continue our talk about the crypto cycle, don't forget to hit the subscribe button to stay tuned to what is happening on the crypto world. And remember, everything we say here is not an investment advice, but only examples of what investors usually do with their portfolio. Always invest wisely. Let's get started. Bitcoin consolidating just below the $100K mark feels almost surreal, doesn't it? This milestone isn't just another price tag. It's a statement that Bitcoin is solidifying its position as digital gold. Imagine hearing 10 years ago that a decentralized currency would rival gold in value. Sounds crazy, right? Yet here we are, with Bitcoin showing us why it's more than a fad. It's not just the tech-savvy crowd that's watching. Institutional investors and Wall Street are now playing ball. This massive bullish trend signals more than just numbers on a screen. It represents trust. People are beginning to see Bitcoin as a hedge against inflation, much like gold in the past. Remember the chaos in traditional finance a few years ago? Banks shutting down, stock markets fluctuating like a roller coaster. Bitcoin stood firm. This price point is not just a reflection of its value, but its resilience, a quality that no other cryptocurrency has consistently demonstrated at this level. But here's the kicker. Consolidation at this level hints at a brewing storm of opportunity. Traders and hodlers alike are speculating. Will it break $25K soon or retrace before the next leap? The bull cycle dynamics at play are fascinating. It's a moment to reassess strategies, ensuring you're not caught off guard when momentum shifts. Speaking of momentum, have you noticed the ripple effects on the altcoin market? That's where things get really spicy. Altcoins are riding the wave of Bitcoin's momentum, and the rally is nothing short of electrifying. Coins like XRP have flipped their competitors in market cap, while others, such as Chainlink and Polkadot, are experiencing jaw-dropping gains. This isn't just luck. It's the perfect storm of innovation and timing. People who once overlooked these altcoins are now scrambling to join the party, and honestly, who can blame them? The opportunity to ride this wave could be a game changer for anyone paying attention. The rally underscores one of the most exciting aspects of cryptocurrency: its dynamic nature. Unlike Bitcoin, which is often seen as a store of value, altcoins offer diverse use cases. From smart contracts to decentralized finance. Take Chainlink, for instance. Its role in connecting blockchain data to the real world makes it indispensable. Or look at Polkadot, revolutionizing interoperability between blockchains. These aren't just coins, they're tech ecosystems driving the future of cryptocurrency. But let's not forget the risks. For every Polkadot or Chainlink, there's a coin with little substance riding the hype. This is where research becomes critical. Are you diving into white papers or just chasing the next Twitter trend? If you're serious about capitalizing on this altcoin rally, now is the time to sharpen your focus. Speaking of strategy, have you considered how diversification plays into all this? Diversification is the golden rule in any investment strategy, and it's even more critical in the volatile world of cryptocurrency. Sure, Bitcoin and altcoins like Chainlink or XRP are stealing the spotlight right now, but putting all your eggs in one basket is a rookie mistake. A balanced portfolio helps you sleep better at night, knowing you're not entirely at the mercy of market whims. Beyond cryptocurrencies, consider adding traditional assets like stocks or commodities to hedge against sudden downturns in the crypto market. Let's break it down with a practical example. Imagine splitting your investments into thirds. 1/3 in Bitcoin for stability, another in promising altcoins like Polkadot for growth potential, and the last in traditional assets like ETFs or gold. This way, even if the bull cycle takes a detour, you're not left high and dry. It's like building a financial safety net without sacrificing your growth opportunities. Cryptocurrency is exciting, but excitement without strategy is just gambling. And diversification isn't just about assets. Timing matters too. When was the last time you reevaluated your portfolio? The bull cycle won't last forever. Speaking of cycles, have you noticed how the cyclic nature of cryptocurrency markets shapes these opportunities? Understanding these cycles might just be the edge you need. The cryptocurrency market is like a pendulum, swinging between exuberance and fear. Understanding its cyclical nature is essential for any investor aiming to thrive rather than merely survive. Bull cycles like the current one often lure in a flood of new money, but seasoned investors know this euphoria is temporary. Patterns emerge if you look closely, the sharp rallies followed by corrections that weed out the impatient. Timing becomes everything, as profits can vanish just as quickly as they appear. Imagine this: you bought Bitcoin during its 2017 rally, but held through the 2018 crash without a plan. Painful, right? The same could happen now if you ignore the lessons history offers. Cycles are a roadmap, not just for spotting highs, but for predicting when it's time to exit or reinvest. The trick is observing signals like market sentiment and trading volumes. Tools like RSI, Relative Strength Index, and Fear and Greed Index can help you stay ahead of the curve. Timing also plays a role in seizing opportunities with altcoins during a bull cycle. Some, like Polkadot or XRP, might surge early, while others could gain traction toward the end. Recognizing these phases isn't about luck, it's about preparation. Speaking of preparation, are you crafting an exit strategy for when the bull cycle fades? That's the next move to consider. Having an exit strategy is just as important as knowing when to enter the market. The current bull cycle may feel unstoppable, but seasoned investors know better. It's all about timing your exit to maximize gains and minimize regret. Think about this. If Bitcoin breaks $100, okay, what's your plan? And are you cashing out entirely or taking partial profits to secure your wins? Without a clear strategy, emotions like greed or fear can take the wheel, leaving you with what ifs. When the cycle reverses, one smart approach is staggered selling. For instance, you could decide to sell 20% of your holdings at each major milestone. $100 K, $120 K, $150 K. This way, you're locking in profits while staying exposed to potential upside. On the flip side, some investors opt for reinvesting into undervalued assets, like certain altcoins, hoping to catch their rally. Whichever route you choose, the key is to plan ahead, not react when the market shifts. Remember, this is not an investment suggestion, but an example of some strategies that some investors do in their portfolio. Estimates suggest this bull cycle could end within the next 6-8 months, so now is the time to act. But an exit strategy isn't just about selling, it's about security too. If your funds aren't stored safely, gains won't matter. Ever considered how secure storage options like cold wallets tie into all this? Let's dive into that next. Risk mitigation is the unsung hero of successful investing, especially in cryptocurrency. It's not just about making gains, it's about protecting what you've earned. Imagine waking up to find your exchange hacked or your hot wallet drained. That's the kind of nightmare no investor wants to face. This is why secure storage options like cold wallets are essential. Devices like Ledger or Trezor might seem like an upfront hassle, but they're your best defense against cyber threats. Now, beyond storage, balanced investments can act as your financial armor. Diversification is one layer, but how about stablecoins as a hedge? Coins like USDT or USDC can act as a safe harbor when the market gets stormy. And don't overlook tools like stop-loss orders. They can automatically sell your assets if prices drop below a set threshold, helping you avoid catastrophic losses. It's like having a safety net while you walk the tightrope of crypto investing. Handling risks isn't just about reacting, it's about anticipating. What's your game plan if the market tanks tomorrow? Do you have funds set aside for reinvesting at lower prices? Secure strategies empower you to face downturns without panic. And speaking of preparation, understanding how these tools fit into the bigger picture of your crypto journey is crucial. Are you ready to see how these insights connect with the bigger trends in cryptocurrency? Now that you're armed with insights into Bitcoin's rise, the altcoin rally, and the strategies to navigate this bull cycle, the question is, what are you going to do with it? Will you take action, diversify your portfolio, and secure your gains? The truth is, success in crypto isn't just about luck. It's about preparation, timing, and smart decisions. Thank you for watching this video. Hit that subscribe button and turn on notifications so you never miss an update. Together, we'll navigate the highs, the lows, and everything in between. The future of crypto is here. Are you ready to be part of it?